You must be rather pleased, because I think if you look at the year's results and the second half, it's been a time of turnaround, and not just on the balance sheet. Gearing has come down, but also your working capital management, cash generation.
Absolutely. I think we've been through a difficult period for some 4 years, completely re-engineered the business, and we feel we are in a position now to wait and see the positive change in the building industry somewhere along the line. Certainly on the infrastructure side, we have had about 8 solid months of almost at capacity.
So your two biggest divisions, you've referred to them now, building and infrastructure. I'd imagine two sets of driving forces. Infrastructure, I'd imagine government spending, and we saw in the quarterly bulletin on Tuesday, yay, picking up at last, government spending on fixed capital formation. The building side, and as you emphasised, still some weakness there, and in fact it weakened further in the second half.
Correct. Certainly building plans passed improved toward June by a few percentage points, but you know, our business basically resides on refurbishment and upgrade. That market is about 32 billion rands per annum. So you know, through the years that I've been involved in this industry, we've always been a big refurbishment and upgrade business. Obviously when you have a run-up like we did in the building industry in this country to 2008, it was a very nice circumstance. But there's some realities always come, and I think at the end of the day, the way we've structured the business now, we've got scale, so even a small change in the numbers on the building side will fall to the bottom line. So we're quite positive about the period going forward.
Now, one of the concerning areas is the Soundwave division, which is still unprofitable. What is the outlook for that? How do you intend to turn it around, basically?
Well, fundamentally, it's been a difficult business for some years. We have a local competitor, similar. They've actually this year reported good results, and we believe that we will follow behind them quite quickly.
What is the strategy? I mean, what is the strategy there? Or are you not going to reveal any secrets right now?
Not
Sell
at all.
more toilets?
Yes. I think the fundamental is we took about 27% of the manufacturing employees out. We've also reduced the energy cost by some 40%. So those are two very large components in that particular industry. On top of that, we've come up with 22 new products, suites, and we believe that all of that is going to work for us.
You also talk about Africa playing an increasingly important role in Dawn as a whole, but there have been some concerning areas, Nigeria and Angola, two of them. So talk to us about your present kind of operations in Africa and some of the areas where you're finding more challenging when it comes to those two countries specifically. Okay,
some 7 years ago we started our foray into Africa, and we told our board we're going to get some blood noses, which they accepted at the time. Certainly our number to June, this past June, was about 1.107 billion. So we've had good growth in Africa.
That's revenue rise.
That's revenue, correct. We've actually got 3 elements to the business. It's exports out of the country from our brands that we own. It's manufacturing in those areas, PVC extrusion and high density polyethylene extrusion, and then trading companies on the ground. The countries that we are in are Mozambique, Zimbabwe, we are in Zambia, we are in Angola, Nigeria, Mauritius, and we intend opening up a number of other operations this year.
Manufacturing operations specifically?
There will probably be one manufacturing operation and 3 trading operations.
So let's bring Nicholas Serra into this conversation. He's, of course, a portfolio manager at Aspen Securities. Nicholas, thank you for joining us at the desk here. What are your thoughts on Dawn and how it fits into your kind of views on the space it occupies in the investment space, in light of the fact that, you know, it's very much geared towards infrastructure spend and building spend? Well, you actually asked my question about Africa, which I was going to ask Derek, but damn. Yeah, no, it's all right. I'll figure out something else. No, it's a very interesting, you know, sector at the moment. We've actually been looking at it. You know, cash build was one of our first options, but you know, having a closer look at Dawn, I think, is also very interesting. It's a sector that's been under the water for quite a few years, and it's been shunned by the market, and you've seen that on a lot of the share prices. But we're getting to a stage where a lot of talk is happening of a revival, or at least a recovery. And what's happened in between is a lot of these companies have done a lot of restructuring. And looking at Dawn, you've seen that you know, they retrenched a lot of people. They had a rights issue. They had some new systems in place with stock levels, and you can see that coming through in the results. So congratulations, a fantastic set of recovery results going forward. So I think it's a sector to watch, but you know, I would like to see a little bit more happen first before
jumping in with regards to a actual investment point of view, but certainly I think very, very interesting going forward, a good growth opportunity, quite frankly.
I mean, if you had to kind of be speaking to the investment community out there, I mean, how would you sell the company to them, who are very cautious at this point in time in getting exposure to anyone who's exposed to the sectors you are?
I just want to add to that question, because I would argue that perhaps you've got the worst of both worlds. You've got exposure to the infrastructure sector, and the big construction companies still no one is touching. In addition, you've got the residential sector, which is completely bombed out, and as your results show, hasn't recovered. So I'd like to hear.
I think first and foremost, those big contractors, if you looked at their results, all of them have got big order books. Billions and billions of rands worth of orders. So, you know, I don't think we must write it off for them. Certainly from my point of view, I believe that refurbishment and upgrade will lead this process in. I think that a lot of the developments that were stopped during the difficult times, many of them have started up again, because anybody who starts late in this process, the costs are going to be a lot higher. So fundamentally, I think we always looked at the business. We were having a good run with building, got involved in infrastructure. What has happened was we anticipated the building industry would tighten, and that's why we got into infrastructure. Unfortunately for us, with the crisis, both went. So we're looking now for our opportunity where both are on the move upward. Certainly it will be infrastructure led, and the building and residential side will follow behind that.
Another interesting aspect of your report that has been cited by other, local producers here in South African manufacturers is imports and cheap imports. Where are you being most affected by that, and where are these imports coming from? And is government listening to local manufacturers when it comes to protecting local industry?
I believe if you looked at the import numbers that have come into the country, they associate that value with about 700,000 job losses. Now, I can tell you this country, if we don't create jobs through manufacturing and train people in trades, I'm talking about manufacturing as well as all the other trades, fundamentally, ultimately, you'll have no consumer. So we have got to get into a situation where countries like China and for example, India, are not able to export their unemployment into our country. That's fundamentally what's happening here.
And government's response, because I know it spreads across sectors, the chicken producers, always
Absolutely.
Talking about this issue.
I think certainly from our perspective, we've seen cases recently where government has responded, and we believe there's a far greater sensitivity to that issue right at this time by government.
Well, thank you so much for joining us today. Very interesting conversation. That, of course, the CEO of Dawn.